Well, little update on silver, the silver to gold ratio. I know the Webbot's been talking about that, pay attention to it. It's going to be coming down in the future, which of course would be a good thing for silver. So I see this article from Mac Slavo, shtfplan.com, which stands for fanplan.com. This precious metals ratio signals a big move ahead. We will ultimately see triple-digit prices in silver. Of course, I've been saying this for years, and I'm not going to look at you shocked because I already know this. They've got to destroy the economy. The worldwide economy has to suffer. I think our plan in America is for us to be the last one. Let everyone else feel the pain first, then us be the last one, and at the last minute, okay, we're going to fix everything and change the currency and join the new world order, whatever it is, so we don't have to feel the pain as badly as everyone else. At least that's the plan, I think. Yet I don't think anything's going to go as planned, so that might be out the window. But it says, earlier this year, as investors around the world panicked and stock markets crashed across the board, one asset class held strong and actually gained. It was, by all accounts, a capital flow panic out of broader stocks and into precious metals. As a safe haven, precious metals like gold and silver have long been sought by a panicked populace during times of crisis, and given the current economic and monetary debacle created by the central banks, we can safely forecast a continued rise over the coming years for this one reason alone. And of course, there are plenty of other reasons why precious metals will be rising. But according to Keith Neumeyer, there is another key reason for why we could see explosive prices, specifically in silver. Because major shortages loom and current valuations for the precious metal are nowhere near where they should be. Given his experience and current position as the CEO of billion-dollar mining company First Majestic Silver and chairman of mineral bank First Mining Finance, there is no better source for understanding what's happening in silver markets today and where we can expect them to go in the mid to long term. As Neumeyer notes in his latest interview with the Daily Coin, gold is currently selling for about 75 times the price of an ounce of silver. But from a mining and production standpoint, the silver, which physical ratio is about 10 to 1. So how could you pull it out of the ground, 10 ounces of silver for every 1 ounce of gold, essentially, yet the price is 75 to 1, right? Doesn't make sense. Well, of course it doesn't make sense because when you rig everything, that's the government with the banks, nothing's going to match up. Nothing's going to be looked at like a thermometer, so to speak, or a gauge. Well, if this is happening, then let me go look at the price of silver today. Oh, that's weird. If that's happening, let me check out the price of gold today. Oh, wait a minute, that's weird. That doesn't matter. Gold should be screaming right now, and it's actually going down. Right? Brain confused. What? That's not, It's like I just watched a fireman come up in the fire truck, the whole brigade, douse this house with water to put the flames out. And the flames were growing as if they were feeding it with fuel. But I know it was water. I could see it. No smell. It's water, right? So scratch head. Doesn't make sense. That doesn't match. That's not supposed to happen when you put water on a fire. That's because everything's rigged. And each layer of this onion of rigging has been being peeled slowly until we get to the center. And I got a suspicion we're going to get to that center a lot quicker than we've been waiting over these last, 5 or 6 years for the metals price to bounce back. So, this is coupled with growing global shortage supplies for this essential metal. That means prices for silver should be trading significantly higher than they are today. We are currently trading about 75 to 1, thereabouts, and the mining ratio is about 10 to 1. So for every 1 ounce of gold, we're mining 10 ounces of silver. So that tells you it's way rarer than the market understands. I think that as gold goes higher over the next couple of years, the ratio is going to collapse on a percentage basis. And that's why I think we will ultimately see triple-digit silver prices. Neumeyer goes on to note that the silver shortage is already becoming apparent in electronics markets, citing a recent discussion with a large electronics company that was having problems acquiring the precious metal for components in their products. Markets go through periods of time where they're imperfect, but they do perfect themselves over time. What I mean by this is eventually supply and demand will take over, particularly in the silver space where it's such a tight market. We have seen in 2015 lower production across the board, and silver is a lot more rare than most people actually think it is. We were contacted by a big electronics manufacturing company, a manufacturer of televisions and cell phones looking for silver supply. In the 13-year history of First Majestic, I have never been contacted directly by an electronics manufacturer for supply of silver. So that's telling me there is something different going on in the marketplace. Now, if I was him, I would have told that electronics company, listen, I know a place that has all the silver you need. Oh, really? Where? Who can I call? You don't really call. Find a broker that deals with precious metals. How many ounces you need? A couple million? Okay. Go get a futures contract and immediately demand delivery. Each contract's worth 5,000 ounces, so you do the math, and that's how many contracts you're going to put out. Good news is you only need to put up 10% to get the contracts. Of course, you want to get the silver in full, so you have to put up the full amount. So that 10% plus the 90% ultimately to get your silver. But they will give it to you. And I know a place that it comes from called the COMEX market. So I strongly urge you to go over there and place an order, so to speak. Futures contract and immediately demand delivery. That's what I would say, because I would want them to put the pressure on the COMEX market. The same market that doesn't have the damn silver anyways. All they push is paper. So that would force them to scramble to go and get physical silver for this electronics company to get their silver. What's happening is that mine production slows down and global shortages are finally catching up with the market, and electronics companies are having difficulty sourcing silver. This has been seen in other sectors as well, including the U.S. Mint and Canadian Royal Mint, both of which were forced to suspend sales of silver coins and bars, respectively, in 2015 as a result of high demand and lack of supply. These are key indicators that industries dependent on silver are already running into problems acquiring the supplies needed to continue operations. And while prices have yet to catch up, the trend is clear, especially considering the recent admission by Deutsche Bank that it has been complicit in the suppression of precious metals prices and that other large financial institutions are in on the scheme. Given the dire state of the global economy, failing monetary policies from central banks around the world, supply to demand ratio or fundamentals, and the fact that price suppression schemes have now been exposed, one can't help but consider that the current gold to silver ratio will, as Neumeyer suggests, collapse to its natural state in the near future. That can only mean one thing: higher silver prices, and perhaps, as the chairman of First Mining Finance notes, triple-digit prices that will see massive capital flows into silver-related assets. The Webbot said way in advance you would see it coming back down to reality. 30 to 1, 20 to 1, 16 to 1. It even said 10 to 1, which is now being quoted in this article, not from the Webbot, but now they're actually saying it. This isn't the first time I've heard that number. And Webbot has said, again, could be wrong. It could not. It may get it wrong. But it sure as hell was in the data. And not just once. And that is parity. 1 to 1. Which also means price parity. 1 gold, swap for 1 silver, etc. Back and forth. And it didn't think that would last very long at all. and that it would come back down to reality. But even when it came back down to reality and the panic slowed, as far as the panic to own precious metals, especially silver, that it would still be like, wow, this is where the price should have been all these years, which isn't 50, 60, 70, 80, 90, or $100. It's going to be more than that. So if anybody should know, I think this guy ought to know. Take care.